There might have been a mistake in the code, but that group or person stole $40 million. So what are we going to do about it? Well, they had it quarantined for a while, and then they figured out how to fork the code, how to come up with a different variation of the code, and everybody agreed, not everybody, but a substantial proportion of the community agreed, we're now going to run this new version of Ethereum code that effectively blocked all this off and made it so you could return most of that money to the original addresses where it came from. But the purists said, no, we're going to keep running the old blockchain. So that's how Ethereum Classic was born. But the DAO, in the aftermath of all this, the SEC in July 25th said, basically, we looked at the DAO, which was a virtual organization using blockchain to facilitate the offer and sale of their tokens to raise money. They applied existing U.S. federal securities law and determined that these tokens were securities. Their tokens were securities because nothing existed at that point, and they were raising the money so they could go invest it in other companies. So that's clearly a security. So the commission says, however, those who offer and sell securities in the United States or to United States citizens anywhere in the world, they're required to comply with the federal securities law, even though you have a vision that this token is spendable. So basically they said it's security, and that was illegal. Now nobody went to jail for that one. But stay tuned, my expectation is 2018 we will see some large lawsuits or some large SEC actions against players to make a point. On December 12th, the SEC chairman talked about ICOs. This is kind of funny because Jonathan Finch from TechCrunch wrote, effectively the SEC chairman said, if it walks like a duck and it quacks like a duck and it looks like a duck, it's a duck. Meaning, just because you say your token is a utility token means you can spend it, doesn't mean it is. And they're trying to protect the small investors from getting taken. That's basically what that statement says. So if you're going to offer a security, it's okay, just follow security law. Which means in ICO world, if you're going to take U.S. investors or buyers and U.S. residents, and it's really a security, then call it a security, and you can sell it to accredited investors, because an accredited investor is considered someone with relatively high net worth, $1 million net worth, or $300,000 in income. The SEC deems they're big boys or girls good enough to protect themselves if they've accumulated that much money, so they can play. If you're not, you can't, because it's until you can actually use the token. And it's also talking about open to manipulation, and effectively anybody who sells what's the equivalent of a security without a securities license is breaking the law. So you have to be careful with these things to ensure you're legal. And another analogy you can use for tokens, think of it as software. Okay, so my token is a piece of software. So if I give you this piece of software, your expectation, if it's a utility one, is I give you the software, you load it up on your Mac or your PC, and it runs. Similarly with a token, if I give you the token, then you can immediately do something with it, which is spend it. You can actually go send it back to the company and get some goods for it, or put it in an application to play a game or whatever. Then that's not a security, because as soon as you got it, you can spend it. So you're not relying on the efforts of others to make a return for you on the money you put in. You're actually going to use the thing. So I talk about how ICOs work. Ethereum is a platform that allows you to build. Then you can build on top of it and develop applications that run on top of the Ethereum blockchain. So when you look at ICOs, if you're ever going to invest in one, these are the ways I look at things as if I'm an angel investor, because it's about the same thing. Why should you put money in some company? I like to look at it in this order. We can argue about the order later, but my view first, technical viability, meaning have they built something? So if our little company just has written a white paper and done a high-level design of something, we haven't built anything. So giving us money, you're taking large technical risk, because software doesn't always turn out as well as it could, and it takes longer and costs more, versus the case where if our software already exists and it's a minimally viable product, you're not taking technical risk, can it actually be done? You're taking risk of, if I give them money, can they scale it? Next one, market acceptance. Many business plans have been done that basically says, hey, there's this gigantic market. we're building this cool little widget and we're going to capture a small slice of that market, and a small slice of this gigantic market makes us a good business, but makes a bad business plan, because no guarantee, you could be, building something and hoping they all come to you and nobody comes. So market acceptance in my parlance is you have a paying customer, or 2 or 3 or 4. Because if you've proven that people part with their money for what it is you have, then there's a good chance that you can succeed in the marketplace. Next one, team. Team's very important. If you've already got something built, you already have a customer, then the team comes in importance to say, hey, I'm going to give Bernie $5 million. Because that's the money they need, that he wants to raise for his company, we'll say. He's got a product, he has customers, so I'm not taking huge risks technically because it exists and it's in use. I'm not taking huge market risk because people are willing to pay money for it. However, if I give him $5 million, can he put $5 million to work appropriately? So that's what you evaluate the team for, such that this whole team, do they have marketing people that have proper backgrounds and been successful? If that's true, then great, you give them money and you have a high expectation it'll work. Team's the most important if you haven't built anything yet. If you put a team together of Mark Andreessen and Bill Gates and Vitalik Buterin, the founder of Ethereum, if those 3 are on the team to go do a new token, and they hadn't written 1 line of code, and they had a short white paper with the idea, they'd have no trouble getting any money in the world, because they're very well known. But if it's nobody's, that nobody knows about, very hard to get money and be very skeptical. And the last one, timing. What is the timing? Is the timing right? You check and see, what are they trying to do, what marketplace? Timing wouldn't have been so good, to come out with something for horse and buggies when the first car came out, because you'd be highest in the market in a dying or soon to be dead market. This is VC and equity investment landscape. So basically, ICOs are taking over the fundraising, at least for the last year or 2. This year I said we'll see more regulation, but that's actually a good thing. Weed out the bad deals. Get rid of the scams, or ones that look like scams. We evaluate ICOs as part of my company, and our guy who leads that was saying, he sends me this one and says, boy, is this one well written, but geez, it's definitely a scam. But it looks great. So they're getting sophisticated in what they write in order to part people with money. Cryptocurrency hedge funds, you're not saying that they're putting money into crypto. There's more than 50 dedicated to cryptocurrency now, so it's moving towards mainstream. This shows crypto funds by exception, 84 in 2017. Then it shows $3.6 billion in 2017 plowed into hedge funds. So you can see it went from almost nothing in 2013, hundreds of millions, to 3.6 billion. So again, it's moving towards mainstream. Also in Bitcoin, if you'd have seen it, in December on the 8th and the 18th, the 2 different futures exchanges in America started trading Bitcoin futures. Now, so I was definitely afraid of that when I first heard it, because the futures markets are highly leveraged. And typically 3 to 5% is what you put down, and you can control 20 to 33 times the amount of your bet. Well, if you have a lot of Bitcoin, real Bitcoin, you can afford to dump your real Bitcoin. If you short with that kind of leverage, you can drive the price down 4 or 5 grand. Yeah, you put $30 million. You sell 30 million bucks to crash down the market. You lose 12 million on the Bitcoin, but you're controlling 200 million over here, and you make 30 or 40 million in profit. You lose 12 million in the real markets, and you make 30 or 40 in the futures. However, they put really high margin requirements, like 50%, to prevent that. And our partner who does financial analysis and works with us says introductions of futures allows people now to bet on the downside, which is actually the sign of a maturing market. You can make money when it goes up, you can make money when it goes down, and that will serve actually as a dampener to some of the volatility, the crazy volatility you've seen in Bitcoin. This talks about number of wallet users. Back in November 2016, there was 9 million. October, it was up to 18 million. I think it's like 22 million. Sounds like a lot, but there's 7 billion people on the planet. So it's, and okay, 3 billion are unbanked, but they maybe have Bitcoin wallets, some of them. So the point is, it's really starting to take off, but still it's got a long way to go. Switzerland has their version of Silicon Valley, which is Crypto Valley in Zug, Switzerland, which is quickly becoming a hub for cryptocurrency. It's where a lot of the foundations and companies get set up, that are doing these very large projects. And Switzerland as a country is receptive to it and is promoting it. Lots of companies. Zappo's a wallet provider, which is good. And someone pointed out they saw one Leigh, or Leigh, I don't know how to pronounce it. And lots of companies, lots of different ones are all locating and raising their money and having their companies in Switzerland. Australian government says blockchain is going to support innovation and productivity across the economy. So the government is working to support Bitcoin in Australia. Israel, they're positioning themselves as a blockchain hub as well. Very entrepreneurial, very good technically, strong defense industry, and Army elite, which means there's classified money to get put into this kind of stuff and see what they can get out of it. Breakthrough research, so again, they're very supportive as well. People talk about, oh, Bitcoin's a bubble. So, remember the golden tulip bubble that went way, way up and then way, way down. Similarly, the dot-com bubble in 2000, you saw up, 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 almost 5,000 for the NASDAQ, and crashed down to 1,500. Now the NASDAQ's at record highs and the US stock market's at record highs, but it had to do a bunch of recovering when that bubble burst. So you look at Bitcoin, this is kind of a funny chart. In the early days, Bitcoin's a bubble, it's going to burst, it's a fad, it's a scam, it's going back to 100 bucks. Down, down, down. See, it's crashing. Up, 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 going to bubble, going to burst, fad, scam, back to 1,000. See, it's crashing. Back up, going to burst, fad, scam, going back to 3 grand. See, it's crashing, over 10,000. It's kind of interesting. If you plot Bitcoin, I believe for the last 2 years, on average, it goes up 10% per month compound, approximately. Well, if you just look this year, and this isn't even the top performing crypto. Bitcoin in June was around $2,000. I believe in January it was 1,000. And it hit a high of 20,000. And right now it has settled to 16, 17, it's around 14, 15, but that's pretty good. Yeah, sure, it went to 20, and if you bought at 20 and got scared and you sold at 15, you lost a bunch of money. But if you started at June with 1 and just held it, you'd have 2,000 turn into 15,000. So one of the things our company does is look at these, and we say past performance doesn't guarantee future performance. This is all the normal disclosures because it's a financial information company that we provide financial data to people. We don't provide advice because we're not investment advisors. But we talk about ICOs. So one of the things we do is analyze all the ICOs that are coming out. We look at the ones that are coming out, and then we weed the list down. Maybe there's 40, then we pick the top 10 to go look at because a bunch of them are junk or not coming for now or not worthy to be reviewed. So what we did was gave these 7 greens. And you can look them up. You can see them here. So we'll just use the worst one was Everex. So you bought for $1. It came out at $1.62. December 27th, it was $1.92. And on the 2nd of January, when I looked, it was $2.13. Everex, I believe their ICO was late October, early November. So then it came out sometime in December. So in less than a month from it going onto the public exchanges, and maybe 2 or 3 months max from when somebody put the money up, they had 113% profit. That's the worst one. Now that's, to me, only 113%. That's terrible. But what's the best year anybody ever did in the stock market? 30, 40, 50%, you're feeling good. And this is 113% in 2 months. Then there's another one, the best one was Stratum. You could buy it for a penny during the ICO. It came out at a nickel, and on January 2nd it hit $1.18. So you're up 11,700%. And again, a couple of months max. That's not bad. So if you'd have put $300 into each of these, 2,100 US, you would have 48,000 in value. If you only put 100 because you didn't have that much or you don't want to risk, because this is all speculative money. You don't put the mortgage, you don't put the car payment, you don't put the retirement fund. This is your speculative money, but that's a pretty darn good return. that you could get playing it. Now, the other thing you have to remember, and we also teach people this, just because the market cap says you have $48,000, it's in crypto. No different than having it in stocks. Until you actually turn it into cash or into Bitcoin or Ethereum itself, it's just a number on a chart. So we tell everybody, hey, when it's up 4 times, sell 30%. So now you have 120% of your money, you get your money plus 20% profit. Then when it goes up 2 more times, sell another 10%, which gets you another 60% profit. So in a relatively short period of time, if it's doing well, you have your original money back plus 80% profit, which isn't bad in a short period of time. And then you're sitting still on 60% of all your tokens. And if it does what that does, great. So now, yeah, sure, you sold off some, but you need to protect yourself. Because there was a coin called New York coin. It went up 57,300% in the first week. 573 times. So if you put $100 in, you'd have $57,000. However, the next week it crashed way down. So you were rich for a couple of days if you didn't try and sell any. And that would be, I don't know, everybody has their own view. You shouldn't be emotional when you do these things. So if you'd thrown $1,000 into it, and you watch this, wow, my 1,000's worth 573 grand. And then the next week it crashed down that my 1,000's worth 3,000. Do you feel good or bad? One side of you says, oh my God, I lost $569,000, right? I put 1,000 in, and it's only worth 3,000. The other side should say, well, I started with 1,000 and I have 3,000. That's 3x. But it's an emotional thing. So anyway. I just wanted to briefly take you through what is crypto and then what's an ICO so that you understand, and it kind of sets the stage a little bit for when Bernie's going to talk about what he's doing and what we're doing together so that everybody understands. Does anybody have a question or two on what I've covered so far? Then we'll let Bernie come up and talk a little bit about beta sequence for maybe 10 or 15 minutes and then let everybody get to the wine. Any questions? Wow, good. You guys already knew something about this. Perfect. Well, we got a question. Here we go.
What are your fees?
What?
What are your fees?
What are my fees?
Yeah.
What do you mean?
Well, as in, okay, so you give recommendations. I mean,
okay. I'll answer that a couple of ways. That part of the company that does all that work is a network marketing company, so people can join and buy a package, and you can come in to get access to all that stuff. Come in at it costs $499 or $999 to join, and then you get a mining contract, you get access to reports, you get information about the mining industry, and you get access to this services, and then the subscription is $139 a month. But when people are making that kind of money, or anything close to that, agreeing to pay your $139 to get access to the information is kind of a no-brainer for people that actually use the information. So we don't charge a huge amount of money for that. We can talk separate, I can show you more information. But with that, let's bring up Mr. Bernard Leigh, who's the co-founder of Bet a Sequence. Let me bring your slide up.
Thank you very much. So thank you, Dan. Always very interesting, but he always throws in a few extras. But just whilst he's transferring this across, please make sure we've got your registration details, because we're going to send out links. We're recording the seminar. We're going to pick the best of the yesterday's seminar and the best of today's seminar, and the presentation documents both from Dan and I will be sent out to everybody. So I've watched everybody taking photographs and making notes. If you've missed something, don't worry, it's all coming to you. Anyway, right, so Bet a Sequence. I think the easiest way for me to go with this is, what is it and where did it come from? So Bet a Sequence is something that was a brainchild of my co-founder, Michael McLaughlin, sat in the middle at the back, and it's something that he had developed for a spreadsheet application that had started somewhere about 15 years ago. Through a labour of love, he developed this, and it was something that he wanted to do so that would allow him to keep a hobby every day without it. If it was in England and it was typically raining every day, or whilst he's out here in Cyprus, he could just use the same spreadsheets and do the same application. So Michael's been actually playing his own application for 7 years, year over year, race over race, and he can't put it down. Every morning he'll go out, buy a copy of the newspaper, look through the racing results for yesterday's races, and he feverishly puts them into his spreadsheet application, and then up comes this wonderful calculation that he created, which mathematically works out the losing sequence. So, May last year, Michael and I were sat down having a couple of beers together, and I said to him, "Well, you're in software, aren't you?" And I said, "Yes, you could say that." And I have been, and am still, and this is how I got to meet Dan 5 years ago. I work for a company in Austin, Texas, so does Claire at the present moment, and we project manage professional services delivery of enterprise software. And Michael said to me, "I made something that interested you. I've created this little application. Would you come and have a look at it?" So, saying that, I went round and had a look at it, and I was absolutely gobsmacked. How complicated Michael had actually gone into each and every possibility and scenario of what could happen in the premise of a losing sequence. But just to sort of highlight on what is a losing sequence, let's talk about if you were tossing a coin. Obviously the first time you toss a coin it's 50-50. Now each time you go on with that coin toss subsequently, and I haven't had wine yet, that prediction or that formula starts to change, and it will continue in a sort of a pattern similar to that. And I believe, Michael, correct me if I'm wrong, it's called a binumeral algorithm. So this type of thing Michael had created it on his own, was to actually be able to make a prediction based on a set of losing sequences. So the important message there is that what we do is slightly random, but it's actually the randomness is the fact that we are actually not taking any past or previous performance form, as it's known in horse racing, as the data source. So, as I said, Michael takes the data from the races completed on the previous day, he uploads them into his spreadsheet application, and going from there on, I saw immediately a way that my experience would be to take the spreadsheets and put them into a professional database, and rather than sitting and typing in the results, we could put an automated feed straight into the database of all the previous days' data. So there was a reason for us to start to progress through this. The other thing that really pulled on the heartstrings for me was that my family, all ex-restaurateurs, publicans, and if you guys know anything about it, horse racing and pubs and publicans have been a match made in heaven for many years. So I was thinking about this, that my father's hobby when he was alive and in business, he'd love to, and when I was 17, I learned to drive by driving him all over the countryside to different horse racing meetings. So for me, this was something that I could see as a business, but there's also a slightly passionate side to it as well. So what is the plan for the application? So, as I said, having seen Michael's spreadsheet application, I wanted to actually see what we could do. But the target for the application is to create an online version you can access through a web browser, or to have a hybrid mobile application available on iOS or Android. members that hopefully when we get some more people that are interested, we've already got quite a bit of interest so far, but we'll pay a monthly subscription just as you would do with like Netflix.